Hey, everyone, well, hi, it's Ritchie here at Citizens Financial. First and foremost, happy Wednesday. So we regularly do a kind of scripted webinar Wednesday. We've been focusing for the last probably 6 months on our amazing DPA program. I wanted to do something a little different with as the market changes, I want to change it with that too. So that said, I wanted to kind of have a quick conversation. Will not be 15 minutes, maybe shorter, maybe about 10 minutes, just regarding like riding the wave, right? Where are we on the market? How can we forecast going forward as a lending professional, as a real estate agent here in California? I say California because we have offices in Vacaville, Northern California, Fairfield's next door, and Southern California. Our amazing partnership with the Bell Group in Long Beach. So we're absolutely crushing it throughout Los Angeles as well. So we have kind of a nice picture of how the markets are working in NorCal, SoCal, and also have loan officers out there in Upland, California, service San Bernardino County. That said, who we are, Citizens Financial, we're an independent mortgage company. We're kind of a little different. We have a huge kind of emphasis and mantra. Our company credo is proudest of those who serve and keep our community safe by providing exceptional home financing. So that's why we have the nickname, the Baddest Broker, is what we do. We work with a lot of officers, first responders, members who use armed service, teachers, educators, on providing exceptional home financing products throughout all resident California. We focus on DPA programs for people who serve with badges and our citizens that do not. Some of our products are pretty unique, and we've got recognition for what we do through an education kind of forwarded mortgage company. We are one of 8 mortgage companies, all of California, have been given this amazing access to a portfolio, which really has helped out. And that's where I kind of want to talk about making sure how you be different. What's your unique sales position in this current economy? If you're an agent, if you're a loan officer who is 0 to 2 years industry, 2 to 5, and 5 to 15, your experience right now of what we're going through with a record pace, I mean, literally nose-bleeding pace we've seen the federal funds rate increase with the mortgage rates in the last year for year, you're probably wondering, what the heck have I done? Or have I made the right choice in the industry? I say yes. You have to have grit, stick through it, and make sure that you're in it for the right reason. If you want a low-hanging fruit into your application and some easy, fast money job, might not work out right now. You have to have grit, understand this is a business. It's a career. It's not a job. It's not a get-rich-quick scheme. That said, it really focuses to understand where we're at in the marketplace. I've done my 3rd presentation of the day, so I'm going to lose my voice a little bit, but it's like an inverted pyramid. California right now is a huge inverted pyramid. You have a huge amount of people, millions of people that are going to work every day, getting a paycheck, make sure the credit is good, ratios, getting ready to rock and roll to buy the house when, quote unquote, the right time is. So that's the issue. It's really an education we need to give our clients as mortgage professionals, as realtors. So when is that moment? There's a lot of people that waited a year to 5 years for the market to fall out. Never happened. Now they had FOMO, fear of missing out, and they actually didn't do it. They didn't do it because FOMO was trumped by fear of looking like an idiot by buying at the top and the market fell. So they actually never got in the market. Now they're in a position where, wow, the cost of ownership is extremely high, inventory is extremely low, and I still don't own a home. So at this point, we have to deal with what we have. The rates are higher, but that inverted pyramid is very important. There's millions of people in California that have the ability, have been saving up and ready to go. What we're not talking about is the millions of people in California, like in certain counties, you have 25% of the residents are above 50 years and older. You're going to see a huge amount of movement once the cost of money comes down, hence rates and affordability for people that are living in 2 stories, triplexes, or homes with unsafe staircases that are going to need to move. They're going to downsize and sell inventory for your realtors, but they're going to be buying into our communities with $500,000 down, $250,000 down, $800,000 down, because they have an exceptional amount of equity. So your first-time home buyers are going to get ran over. So I've been really preaching, understanding that please do not wait until a pundit on some show or internet says, now's the time to buy. You need to educate your clients on buying when you're ready. Look at proximity to work, proximity to school for your kids, safety, and all the variables that come into home ownership that they need to understand. If you can afford it now at these price points, my gosh, it's going to look a lot better as rates go down. Jerome Powell has already expressed we'll see another rate increase this year, most likely to be up like 0.25%. He's going to hold off until June. June next year is going to be a hot mess. We're in the middle of the election season. We're going to see where we're at the halfway point next year, coming out of Q2. So at that point, rates might go down and all of a sudden all is well. People are running the market. Please do not have your clients wait to that point, because at that point, they're going to get ran over. It's better to buy now when they can afford it and then take advantage of the lower cost of borrowing at that time, allow equity appreciation to climb as others are buying around them, and they get a benefit behind the lower mortgage on the house they already own. The current instant gratification, you got to talk about home ownership and real estate is, even as cost of ownership is high, cost of rent's high, but the mortgage interest deduction you get in the 1098 form really makes a difference. Please educate your clients on the difference of owning and renting. Even if they're both really expensive, the actual tax benefit of owning is really awesome. So that's about it. I just want to talk to you about that. When it comes into really being a mortgage professional in this time, our company, we worked for so long in California. We realized that 78% of all the licensed mortgage professionals are not like we are here at Citizens Financial. We have a DRE licensed company with an MLS. 70% of all licensed professionals. I learned this last year at the AIM convention. If you're not an AIM member, I recommend you being one. Great information they have at AIM. 70% of all licensed professionals in America are licensed by the DRE. The NMLS only, depending on your state designation. Here it's the DRE. Other places it's all these other acronyms. So in California, 70% of the licensed mortgage professionals work at a retail shop, a big bank, or a large correspondent mortgage company. They kind of have an umbrella effect, but they're not personally licensed with the DRE. They rely on their licensing under the company. They can't move freely. It's become a problem because now as products have gone away, lending is tightened, and rates gone through the roof. They're trapped trying to fit a square peg into a round hole. It doesn't work out. You're trying to convince your clients to take higher rates, and that's not the best benefit. So we worked really hard the last about 6 to 7 months of now becoming DFPI licensed along with our DRE. So loan officers can leave retail, come wholesale. They're coming in droves. The highest rates since 2009, people are leaving retail to wholesale to help find better ways to serve their clients. I'd love us to benefit from that as well. So please join our company. You're able to give your clients a better kind of portfolio of products and pricing. And the service level is outstanding. A lot of the misnomers about the wholesale world has been debunked in the last 5 years. Oh, you guys are slower and inefficient. The number one company in the country, beating Wells Fargo, Bank of America, Chase, everybody, is a wholesale company, not a wholesale mortgage. They really showed the country that it can be done at the highest level of efficiency. So it's very amazing to come on wholesale, but really it's about products. We have unique products right now that are absolutely ridiculously better than retail. Trying to convince somebody to buy 8%, maybe it's not the right idea. We have rates in the 6s. That 2% difference could be exponentially savings over a 3-year, 2-year, 5-year period. While rates hover, you can put them into one of our portfolio arms, like say a 6, 5, or 7-year arm, knowing that they're going to refinance in 3 years. The amount of money they're going to save in 3 years worth of payments and the acceleration on appreciation is outstanding. So please, wanted to kind of talk about riding the wave. Make sure you stay visible. One of the main things I see is people kind of hunker back. They don't share a lot. They don't market. Go to your local real estate events, your local marketing events. Make sure you're maintaining a visible status as a professional in your community. Don't take this chance to say, oh, well, I'm going to wait till the market heats up again, then we get active again. Be active now, so therefore when the market does heat up, everyone knows where to go and who to seek attention in your community. Been through the cycle before, so please stay attentive. Last bit of information about riding the wave of this current economy. Make sure what you intake in your mind. Do not become obsessed with negative news. There is so much amazing data out there about the mortgage industry, the financial industry, mortgage-backed securities. Look at how the Federal Reserve is acting, the reaction, geopolitics, how it might affect housing inflation, our California housing laws, which are nuts sometimes, and how it's inadvertently affect you. Make sure when you read articles, it's to empower you and you find that nugget information of how you're going to build your business and go through this. Do not get caught up in the data and the negative news to reaffirm your feeling of, oh, this is why I'm not busy. I've been through this before in the past, and it was really hard to make sure that your intake information to be seen as professional, but without bringing a sense of depression, negativity, and doom and gloom to your current psyche about the industry that you're in. I think we can kind of take some of these tools away from this meeting. You'd be better off. Remember, ride the wave, don't let it get crushed, and stay mobile and stay active. Love to talk to you if you're in California, hopefully in the Southern California region or the Bay Area, about joining our company. There's some pretty amazing opportunities and offers for you guys as far as pricing. The difference in pricing will be the difference of you winning or losing. We have amazing products and pricing. People love doing business with their friends to a point. No one loves you enough to pay 2% higher than they should. So make sure you align yourself with the right team, products and pricing, make it through this economy for the next year and a half to a year as we see the Fed level out their fight on inflation. I hope all is well, and please reach out to anyone here at the team at Citizens Financial for kind of advice, help on our programs and pricing, and have a great day, everybody.